SpaceX. Today we are going to talk about SpaceX. Everybody loves SpaceX. It is a fun story. It's the future. Everybody knows that. If you've played Tesla before, traded Tesla, you know exactly what SpaceX is. So we're going to look at it, see where it is now, where it's been, where it's going, and more importantly, how to trade it with lower risk. So let's jump right in. So if we look at this, this is a chart on SpaceX, and compared to anything else we trade out there, this looks kind of boring. It's, it gapped up. Initial price, IPO price was 135, gapped up to 25, and then it's been a steady just down, 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 down. Now we had our first earnings report here, and we are getting some little movement up here. But as far as charts go, I mean, there's nothing to look at here. If we compare this, let's just go over here. Let's go to, I don't know, SPX. We've got moving averages. We've got all kind of stuff we can look at. We have here, we've got the squeeze. We've got all kind of indicators that we can put on this stuff, and we have a better idea of what's going on here. These are 34 EMAs in here, and Darvis boxes, very cool way to look at things. But we don't have that with SpaceX. We don't have anything, right? So what do you do when you don't have anything to look at? Well, I'm glad you asked, because that's what we're going to talk about today. But first, I want to do another really cool thing and look at the options and option volume, open interest. That can tell you a lot. You have to do a little detective work along the way as you trade if you want to have an edge. So the first thing that I did was to go to my trusty AI over here. Now I use a platform called Max. It's a really cool platform. I'm going to be doing a lot more videos in depth about all the kind of stuff that this thing does. I'll show you, and let me know. I can get you a discount on this if you want to. But I simply said, can you look at any unusual or large size option activity in SpaceX? Go out as far as you can. Okay, 2 expiries jump out immediately. Let's drill down. So the first one's October 16. And the way that I've got this set up, and you can design this any way you want to, I've got it set up to be 2.5 times the open interest to flag it as something we need to look at. And the reason that we need to look at large volume open interest is where institutional traders go, for example, and we can see what they're doing, potentially see what they're doing, potentially see what kind of trades they're doing, or we can actually really see it. You can tell in most cases, and either tag along with that or know how they're positioning. So let me show you how that works. Very cool, and then we'll get into the trades, the super cool trade. So this is where the real action is. I know you can read this. Fresh, this is fresh today. Ask side heavy sweep. This is a single largest unusual print today. Someone is aggressively buying upside calls, 35% out of the money. That's pretty aggressive, 35% out of the money. So we've got the volume here. We're going to look at this in just a second, but I'm going to show you this. So we've got October 16 and September 11th, again, flags as unusual because my ratio, this is over, I'm looking at over 2 times open interest. This is 2.58 times open interest. So that's the reason I point that out, is that you will see that going forward in this video, and I'll show you, why didn't it flag that? Why didn't it flag that? And that's exactly why. But here's what we're going to look at. So the summary, the bottom line, and all this takes about 10 seconds to do. So cool. Is that bottom line, the dominant theme is aggressive call buying in the October 16, 175 and 180s. That's what we're going to look at. Fresh today alongside large existing open interest at 200. We're going to look at that. Someone is positioning here is important. Significant upside move in SpaceX over the next month or two. We'll look at the 110 puts. I believe that's possibly a risk reversal or something. We'll look at that, and I'll show you what that means here in a second. So let me move that over, and we go over here to our volume, and the first one we want to look at is that Max flagged for me over here. It says aggressive buying 170. Basically everything up here, 160, 175, 180, up to 200, right? So that's the open interest. That's the volume. So open interest was done, anything that was done yesterday or prior. Volume was done today. So tomorrow when we come in, those contracts will move over on top of that, right? And all these will be zero, tomorrow. We'll start back over and do it again. So that's what Max is looking at here. And it actually didn't flag that one because this is not 2.5 times that. But it's getting us in this zone where we need to be, 165, 70, 75 to 200, right? And so there is a lot of aggressive call buying. People are thinking this is going to go to the upside, right? The next one is, what was it? Let's see, September 11. I just want to show you this real quick. So September 11, and all these are calls kind of out of the money. 150, 200, sorry, I'm looking over here, and then 230. So anyway, it's flagging those. And again, the cool thing to do is to find that stuff and go, okay, if it is that large or that much out of the ordinary, obviously somebody's doing something that has some money and knows what they're doing. They're not retail traders for the most part doing this stuff, because these are really big positions, right? And you can see that a lot. If you've watched any of my other videos, we do a lot. I do this all the time, and we do a lot of this with like SPY. And in that situation, they're doing 150,000, 200,000, 300,000 contracts. I mean, big size, right? And you can tell, and that's good to kind of know what the institutional guys are doing. You can follow along with that, right? So let me show you this. So now this is on TOS. If you are using TOS, the cool thing is that on TOS right here, they have time in sales, right? So time in sales today showed me 5,200 contracts. Right there. So I went to my AI and I said, what is going on with those 5,200 strikes? You didn't mention it. Well, those weren't 2.5 times, so they weren't flagged. But the bigger reason, that's not, these are not fresh hits, right? And I'll show you what I mean. It's a massive pre-existing position that's nearly mirror engine side, classic synthetic or collar book that's already on, and people are adding to that or repositioning it a little bit, right? Bottom line, this is institutional positioning. Let me show you this. Hold on, let me clean this up a little bit. So bottom line, this is institutional positioning, likely a collar or synthetic long out to June 2027, right? With 115 put as the floor and 190 call as the upside wing. I'm going to show you how to do that. That's going to be the trade we're going to look at today. Super cool way to do it. The near mirror open interest 250, 170 suggests a larger block, larger book already in place, not a retail trade. That's what we want to see. We don't want to follow, we don't want to follow somebody that's doing 100 contracts or even, 50 contracts or whatever. We want to follow bigger blocks, and that's what these two are. Now, again, these go out to June 2027. So they mentioned, and you can see it right here, 52.83 and 55. Those are the same. That's the same trade, and there's already 7,000 out there, and there's already 4,000 out there. So somebody's adding to that position. So that, to me, appears to be a collar position. So that's what I want to look at today. That's a super cool way to buy stock and have a really limited risk kind of trade. So let's build one. We'll build one together. Super cool. Now for SpaceX, obviously, there's really nothing to go on. We can have a feel good about Elon or the potential of the SpaceX. This is going to be the next $1 trillion company or more. I do think over time this is going to be a really big winner. Over time, I don't know what's going to do in short term. I don't know if anybody does, but I like it. So we want to play it to the upside, but we want to be safe about it. Now we could do, I know I'll get this question, why don't you just do a vertical, debit spread or something like that? Yes, you can. But the point, and I'll walk you through as we do this trade, The point is to be able to own the stock. So let's set the trade up. We'll go to Trade tab again. I'm on TOS here, Thinkorswim, or Schwab now actually. I want to give it time to work, so let's go out here to 18 September. That's 38 days from now. Don't worry if you're new to this or you're not getting what I'm saying. Just follow along. You'll get it. It's not that. This is actually a pretty straightforward trade. So what we're going to do, matter of fact, I will build it in pieces for us. We're going to buy the stock, and let's say we're going to buy 1,000 shares of stock. We're just going to buy it at the market here, 132, whatever. And we're going to do that. So we bought 1,000 shares of stock. Now we want to protect that stock. So we are going to buy a 135 put, right? So we're going to buy a put there. Now that is step one, is to buy the stock. Buy 1,000 shares of stock. That's this. We're not selling, we're buying a put. That's this. Now you have a floor. You cannot lose more than that, no matter what. And if we did that and we bought 1,000 shares, the most you can lose is $10,300. And that is on a $132,000 trade. Pretty good, right? I mean, you have a floor. Obviously, you don't have to buy that many shares. You could buy 100 shares, whatever. But is there any way we can offset the cost of that $1,250? That's pretty expensive. What are we going to do? Well, we're going to sell a covered call. Everybody knows what a covered call is. And sorry, I got two computers going over here. Everybody knows what a covered call is. So we bought the put. Now we're going to sell a covered call. I'm going to do some simple math here. Our expected move here is $25. We're at 133. Let's just call it 150. So that's plus or minus. You see that plus or minus? No, it may be 25 points down or it may be 25 points up. And I know it gets a little bit higher than that, but for the sake of this conversation, we're going to go to 150, and I'm going to sell a covered call on my stock 10 times, right? So I'm going to bring in $6.30 right here. Don't worry about that one up there. So that's what our trade looks like. So in steps, this was step number one. We bought the stock. Step number two, we bought the put. Now we have a floor, cannot lose more than that, right? Because you have that protective put. And step three, we sold this to offset some costs. So we bought that for 12 and we sold that for 6, round numbers, right? So we've still paid $6 debit. That's fine. Is it worth $6 if you've got $132,000 on the line? Is it worth $6, times 10 to completely, you can sleep at night. You don't have to worry about it. You cannot lose less than that, or you cannot lose more than that, right? So that's what the trade looks like. And again, basically, if you didn't buy the put, it's a covered call, just like that. Beautiful, right? So why would you not do that? Well, full circle here. Why would you not do that? It's a little expensive. You could do a debit spread called debit spread vertical, and it would be cheaper. But guess what? You have a limited time frame, and you don't own the stock, right? So here you actually own the stock. So if I say, I want to do this, but I want to have some protection, but at the same time, I want to own SpaceX for 5 years. Okay, well, you own it here, right? You got 1,000 shares. Now, what we would do, obviously, if we start to breach this 150, we could roll that to 160, we could roll it to 170, we could roll it to 180, and not give up our shares, right? Or we could let them be called out and start a whole new trade, right? And we could do the wheel strategy. I wrote a book called The Wagon Wheel Strategy. Check that out on Amazon. I'll try to put a link in the video below, but if I remember, but I wrote a book on it, I don't know, many years ago. But a collar is a cool way to do it. Now we can do this as one. You don't have to do 3 entries to do it. And let me walk you through that. So if we go back here to our trade tab and we say, you know what, I like the sound of this. We're just going to click right here. And we're going to buy on think or swim at least, collar, see that, collar with stock. So that's our trade. And we know we're going to buy that 135 put, and we want to sell the 150 call. Stock, we own the stock, bought the put, sold the call, right? So I like round numbers. I'm going to put 139 even. Just, I like a round number, just for a conversation, right? So here, if you did that, check this out. Here's the math. I'm a math guy. 10 times 1,000 shares, right? You got $4,000 of, that's all you can lose, right? You could make $11,000. You see, sorry, over here, at expiration, now this is 18 September, the max you could lose possible is $4,000. And keep an eye over here, the max you could gain or profit would be $11,000. And again, if we go ripping higher up here, you can do a couple of things. You could buy that call back. You could say, you know what, I don't want to call on anymore. I'm just going to buy it back and just let it run, let the wild horses run, right? Or you roll it up 150, 160, 170, 180, and you kind of keep in front of it so that your stock doesn't get called away. Or you say, you know what, I'll let it get called away and I'll buy it back. I want to be in the stock. Maybe it pulls back and I can get a better chance to buy it back, right? Lots of things you can do. It very, very flexible. Don't think that once you do this, you're locked in. The only thing you're locked into is no risk on the downside, and that's the beauty of the trade. But here's the cool part. Check this out. If you're following along with the math, so we got 11, sorry, I can get my drawing tool over here. We got $11,000 of profit over here, right? So $11,000 of profit over here is going to cost you $13,500 in margin. That's a pretty good return in, what was it, 38 days or something, basically a month. So that's not doubling, but it's pretty close. Yeah, what is that, 80%? That's a whole lot of profit on $13,000 of margin. Now that's in a margin account, and it's even better. This is not a portfolio margin account. If you had a portfolio margin account, it'd be a lot better than that. But if you don't have margin, I'll switch it over here and we'll go here. If you don't have margin, all right, now Houston, we have not a problem, but we got something we need to discuss, right? So if you do not have margin, or it's an IRA, yes, it's going to cost you a lot of margin. So what do you do? Well, okay, same thing. The numbers are the same. I'm going to reduce the number of contracts down here. Let's just do one contract. So down here, I reduced it to one contract. Now I got 13,000 in a non-margin account or an IRA. So let's see what the numbers look like. Okay, so the most you can lose is $400, and the most you can make is $1,100. That's still not bad. Nothing wrong with that. And again, you still own the stock, and you have a floor. So what happens is at the end of this trade on 18 September, right, which is, again, 38 days from now when I'm recording this video, on 18 September, you can say, you know what, I feel pretty good about the stock. I'm going to just hold the stock and just let it run and forget about it, right? That's great. Or you say, you know what, I like having this protection. I'm going to buy another put here. Let's say the stock's gone up. I'm going to buy another put here, and I'm going to sell another call out here, and I'm going to work it up. Instead of 150 in September, we're going to go to October, November, and we're going to go to 190. We're going to go 200, and we'll sell a call up here, but we still have our put on, and you can keep, duplicating this process over and over and over. Super, super cool way to do it. And again, the point of doing it with the stock as a collar is you still own the stock. Now, SpaceX does not pay a dividend. I do this all the time with stocks that do pay dividends, and you're doing this, you're holding the stock, and you're still getting a dividend along the way while you're waiting, right? So that's the cool part about doing it as well. A lot of cool ways to do it. That's just called a collar. So when people talk about option strategies, if someone mentions a collar, don't think of it as some kind of crazy complicated thing. This is a hammer and nail trade. This is very basic stuff. Everybody knows how to buy stock. Everybody knows how to write a covered call. Everybody knows how to buy a put. That's it, 3 pieces. Now I set this one up here before earnings. Check this out. This is pretty cool. I set this up before earnings for 21 August, which is next week, and it's working great. $7,000 in profit in a margin account. So that's the max profit over here. $10,500 on $26,000 in margin. This one had a lot shorter time frame on it. Now, to be fair, I didn't take the trade. I set it up in my trading room. I have a live trading room. If you guys want to check that out, it's pretty cool. We do this stuff all the time. I don't know why I didn't take it, but I set this up before earnings because we didn't know what was going to happen. It may go way up, it may go way down. I'm like, this can work either way, and it worked like a champ. I'm kind of bummed out I didn't take it, but you know what? There will be another one coming along, and that's probably it right here. This just gives it a little more time to work. So again, cool way to do it. It's called a collar trade. Let me know if you have any questions specifically on the collar. I think I will do another video on leaps, and we'll go out because this is a really good candidate to go out again much further in time, out here to 2027, 2028, and maybe do some leaps. And there's some really cool things you can do there as well. But check that out. Let me know what you think. Let me know if it makes sense. Trying to explain this. Again, I've got a live trading room. I would love to see you guys in there. Come and join us. We do these all the time. And I'm in there all the time. We can answer, chat, talk about this, chat, whatever. Has some really good traders in there as well. I'll put a link down below to my trading room. Also, I have a cool newsletter, free. I do 3 off the I call them outlier stocks a week. It's free. Again, check that out. Very cool. I try to get off the radar kind of stocks, and we found a lot of really cool, interesting stuff. And we do some collars with them sometimes if we buy the stock. Depends on the stock, depends on the price. And again, circling back to SpaceX, I love the stock. This is a perfect setup for this kind of trade because I love the stock. I want to own the shares. I want to own it longer term. And this is a good way to do it, really, with not no risk, but you have very limited and very defined risk on the downside. So with that, let me wind up. Check out the link. Sign up for my newsletter. It's free. It's cool. You'll really like it. It's a video newsletter too. I do a write-up, but I also do video. It's about 7 minutes long. 3 stocks to look at each week. And check out my live trading room if you want to come in there. And also leave me a comment and let me know what's going on. Anything you want to see a video on, let me know. I'm happy to do that. Or if you have any questions on the collar and how it works. So with that, let me wind it up. Thanks for the time, guys. I appreciate it. Went a little bit longer than I normally do. If you're not subscribed, I've got to say it. If you're not subscribed, subscribe to the channel because I put these videos out all the time. I will be doing a series on the AI tool that I showed you guys, and I'll go in from each little tab and show how it works. Very, very cool stuff, and I can get you a discount on pricing too. So I will do that in the next video. Thanks for the time, guys. I appreciate it. I'll talk to you soon. Thanks. Take care.